I'm still reading this with a little bit of a pinch of salt, though. All it really tells us is that more companies had opened up and closed. It's a diffusion index. So in reality, there's still a lot of pressure. But, and the fact that the service sector is doing this well is definitely encouraging, especially given that these are smaller and more export-orientated firms that are surveyed. The question is, can that momentum be kept up? And that's where we're rather doubtful. We may be seeing signs of opening up and continued opening up on the domestic side. The worry comes on the external side, given the collapse in global demand and global trade.
Yeah, absolutely. Export orders are still contracting. So will it be a domestic recovery in China?
Well, this is the problem. I think it's very hard just to have a domestic recovery. As we know from the recent National People's Congress, they removed the growth forecast, the growth estimate. And clearly, the amount of stimulus that's in the pipeline is good, but it's not dramatic. It's not 2008 levels. So while we may see some support to growth, there is every chance that growth is going to come in a lot weaker than last year's 6% level. And we could see something less than half of that. So I think reality is that domestic growth is not going to be sufficient, even if retail spending is bouncing back. I just think the weakness in external trade is going to be substantial. There are some encouraging signs. Certainly infrastructure and housing are looking good, but manufacturing in general is looking very, very weak. And I think that's going to continue to be the case, regardless of this bounce back in the PMI services.
Mitul, it's Hadley out in Abu Dhabi. I want to follow on to that in terms of the numbers, thinking about what happens a little bit further down the pike in the United States. Obviously, right at the moment, we're talking so much about protests, unrest, looting, violence, et cetera. But in terms of those unemployment numbers, your call is that we could see those, frankly, starting to fall in June. What's your outlook?
Well, I think that's right. The fact is that the numbers are horrendous, and there's no doubt about it. I mean, we're looking at several million unemployed. You've got 30 million overall in the counts. But there are encouraging signs. Continuing claims are dropping in the U.S., which does suggest that there is some bottom that's being reached in the labor market. And at the same time, we've got payrolls on Friday. Our forecast is for a 3 million drop in payrolls. Market's looking for 8 million drops. So we are looking somewhat better than that. I mean, it's still bad, but somewhat better than that. But it may not be the worst. We could still see some weakness continuing. But I think we're approaching the bottom, and I think that's what markets are looking at now. Markets are rallying on signs that the worst is past. The question is where we're going to be at the end of the year. And reality is, it's going to be a very slow recovery. The unemployment rate in the U.S. will probably still be closer to 10% than it was pre-COVID levels. So, it's going to be a slow grind recovery. But I think where markets are looking at is that this has been the worst, and maybe things are starting to look a little bit less negative.